Hello, trading is closed on December 1st, 2021. This is my trading plan for tomorrow, December the 2nd. Please trade at your own risk because I can be wrong. Look for the pattern with the early high, which is here. Tomorrow has the early low. We said higher prices should print regardless of how we close. And we got that. We get to cross a target off the list, 45.51.26. We have some others. The odds are good before this carnage is over. We're going to see some or all of those targets. MEJT often leaves a failed target near a high. Doesn't have to, but it happens often. I'm not going to hold my breath waiting for this higher one. During the day, we got an ultimate sell signal as well as a higher target. The higher target came first. The ultimate sell signal worked. There's nothing in this pattern that requires us to retrace, but the sell-off was so intense that the bulls have some hope for a recovery tomorrow, even if we don't close higher. This is a wall into the close. It's a mark of panic selling. We don't have to gap up from this, but often we do. If we gap up over this, that might be left standing for a while, although eventually these things fill, regardless of how high we gap up. If we gap up, this gets undercut. But if we overtake that high, who knows how high we can go, because we're quite oversold. Well, it's possible to count this as an ABC down. I'm certain there are some other counts that work. If we stop here, I can explain it, but doesn't mean I'm going to risk money on it. It just happens to be a candidate by the Fibonacci pattern. Now here's the prior consolidation. A lot of times when you stop right at the Fibonacci target of the prior consolidation, you get a reversal in the other direction, and that marks the end. So if we do gap up from here, I can explain it, but I'm personally not going to risk any money on it. Just means it isn't the best time in the world to initiate a short position. We still have this big volume spike. We're still trading under the lower Bollinger Band. This doesn't have to mark the low to the day, but this is a pattern which is associated with market lows, even if they don't last very long. Doesn't mean this has to be the low, just as in the range. Tomorrow's pattern has the early low. It could gap up. Typically, it's a rally day with a fine lower high. If it's weak instead, more weakness tends to follow, even if the day rallies from the early low. Longer term, we should have much lower to go, and I'm going to underline that. Shorter term, we have a wall into the close, often followed by gapping up. Today had the largest range of the decline. Often the day with the largest range occurs at the end of the move. And that's, I don't know if we'll have a range with a larger range, a day with a larger range, but that's a reasonably good sign. We still have a volume spike in the E-mini and prices under the lower Bollinger Band. Today's low is a candidate for the end of the leg down. Other numbers may work too. I'm just looking for places to initiate shorts, not places to go long. This is not the most propitious place to initiate a new short, if you ask me, because the range, the wall, and the wave count, and the volume spike all are compatible with the low here, even if I don't think it'll last very long. It's not the kind of market where I look for buys, just where I look to protect short positions. Tomorrow has the early low. If we gap up smartly, it could be a rally day. If it's weak early and this doesn't hold, next targets I have are pretty much lower. So we'll see where we open, and that's today's call.